Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be looking at adding value to a certain section of the people who are in this crypto space. As you know, my position in the crypto space at the moment is that I am 100% invested in the Bitcoin miners. But many of the people I know, some of them haven't even started investing, and many are now asking me, when is the best time to get in? So they're holding cash with a view to buying back at the appropriate time. I also noticed on many of the videos that I've been watching over the last week or so that because we got rejected at the 69,000, many of those people are thinking that we are going to go much lower than where we are now. So in order to add value to those people who are holding cash, who are waiting to get in, who are waiting to get the lowest price possible, and for all those people who have been commenting on many people's videos, including mine as well, that we're going to go to 60,000, 50,000, 30,000, etc. So the first section of this video is really for you, because what I've done is I've spent the weekend to look for some real signs of what the chart is telling us of where the bottom might be before the parabolic move. So those people waiting to get in at a certain price, I can tell you today that according to the charts, not according to me, but according to the charts from the signal that I've seen, there's an incredible signal within the charts from the past cycles which are telling us that the price for Bitcoin is not going to go below a certain level. So in order to add value to those people who are holding cash and wanting to get in, the first section of this video is my attempt to add value just for you. And in the rest of the video, I'm going to be having a look at what's happening with the ETFs to give us some clue as to where we're heading in the next few weeks and months. I'll also have a look at the SPX, the gold market, silver market, as well as the dollar and the 60-day cycle for Bitcoin. So if that all sounds interesting, then without further ado, you know exactly what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Before I begin the first section, I want to ask you a question. I've never told anybody my eating habits, what I have for breakfast, what I have for lunch, what I have for dinner, what days I go to the gym, etc. So I'm going to ask you a question just to give you some sort of emphasis of how the patterns on the charts are giving you clues as to what may happen in the future. Since nobody out there really knows me, I'm going to ask you a question. Now, because nobody knows me, you have no record of what I do, you have no history of what I eat, so now you're completely in the dark. So since you don't know anything about me, to be perfectly honest, I don't really know much about myself, but for the purpose of emphasizing this particular point about reading the charts, you can see that without knowing me, you really don't know, you have no clue, no history, no pattern, no past behavior of what I could possibly have this morning or tomorrow, etc. for my breakfast, lunch or dinner. But if I say to you that on the Monday, I go to the gym first thing in the morning and then I have a protein drink afterwards, then on the Tuesday, I go for a walk, after which I have my porridge, and on Wednesday, I go back to the gym, and after that, I have an avocado toast with eggs on top. So with that information now, you can say with a little bit more certainty that next week on Monday that Mr. Wisdom Bites is going to go to the gym and he's going to have his protein drink, and on the Tuesday he's going to go for his walk and he's going to have a porridge for his breakfast. Then on the Wednesday he's going to go back to the gym and have avocado toast with eggs on top. So at this moment you only have one cycle, i.e. the first week of what I do. So just based on that, you can predict better than not having that first week of knowledge. But based on my first week, you can predict that maybe in the second week I may do that because you've got some information, and it's better than when you didn't know me at all. So if I now give you the information that in the second week I do something slightly different but very similar, and in the third week again I do something similar, but because I'm feeling like having something different, this is what I might do. If you've now got 3 weeks of patterns of my behavior in terms of what I do in the mornings, then you can with some certain probability predict that in the 4th and the 5th week what I might be doing and what I might be eating. So similarly, when we were here in this cycle, the first cycle, nobody knew what Bitcoin would do, because there was no history of Bitcoin. But after this cycle, after we'd had the one halving here and the top over here, in the second cycle we had some semblance of predicting something, but not with a very high degree of accuracy of what may happen in the second cycle. And as we can see, there was something similar but also something quite different. So at this point here, after the second halving and the topping of the second top here, we had now 2 cycles to go by, which gave us a little bit more information of what possibly could happen in the third cycle over here. And after this one now, we're in the 4th cycle. So all we've got is these 3 cycles to get some sort of an accurate idea of what may possibly happen going forward from where we are here. So when we look in the charts, they give us some clues. We can never be 100% certain because you can't. Nobody knows what's going to happen tomorrow, never mind what's going to happen in 6 to 12 months' time. There's a lot of water that's going to go under the bridge here. And we're on this journey from where we are to the top of the bull market. And reading many of the comments and also having many people around me who are waiting for lower prices, I found some incredible information which is telling me that the Bitcoin price, based on the information I've just found over here, at these junction points of the halving, based on that, we have a reasonable degree of accuracy to know that where we are currently, there is a price below which Bitcoin will not go. So let's have a look at that. So I'm going to show you something on the first cycle here, which gives us a clue as to what happened in the second cycle and the third cycle and what is currently happening in the 4th cycle. Okay, so we're on the weekly chart here and we're looking at the candle that closed at the exact halving. And if I put a ray on the close of this candle, which is at the bottom of this red candle there, notice one thing. After this candle, you can see the price fell. But as soon as it went above it, i.e. with this candle here, notice what happens to the candles on the right. The price action does not return below this candle, below the white line. The Bitcoin price does not close below that closing of the candle at the halving. So once we recapture the closing of the candle at the halving, which is with this candle here, that is your signal for the big move to the upside. So for those people who are looking to get in, the signal here would be that once you recapture the closing of the halving with this candle, that is the lowest now you're going to get before the end of the bull market up here. And if we have a look at the second cycle, this was the second halving back in 2016, and the Bitcoin price closed on this green candle. So the body of that close was at this point here at the white line. And you can see that once again, after the halving, the price fell below this candle at the halving. But once it recaptured it there, you can see quite clearly it never came back below the close of this candle at the halving. So that's 2 cycles out of 2 where the Bitcoin price recaptured the closing of the halving candle and it never looked back. And in the 3rd cycle, back in May 2020, this was the candle here. If we put a ray at the top where it closed, once again, the same situation happened. After that close, the price fell below it, but once we recaptured it with this candle here, you can see with the white line, the price of Bitcoin did not go back below the close of the halving candle. So that's 3 out of 3. So we have a 100% record. So the question now is, what is going to happen in the 4th cycle? So once again, we use the same method. Remember, these are patterns. So as I gave you the example of my food habits and my gym habits, we can ascertain with some degree of accuracy and predictability with this probability that if the previous 3 cycles are telling us something, then we have to assume through the process of eliciting information and extrapolating it forward. So this is the candle here. So this is the candle that closed on the week of the halving. And this candle closed, it was a red candle. So if you look above here, under the C, which means close, when I place my cursor on this candle, you'll see that that candle closed at 64,958. So if I put a ray here at the bottom, i.e. the close at 64,958, if we look closely, you can see that we went above it with this candle and we've actually come back and retested it last week on this candle here. So you can see the wick came all the way down and retouched the close of this halving candle. So just based on the facts in the charts, just based on the pattern that's developed, just based on the logarithms of how Bitcoin is structured here, it seems with a very good degree of probability and accuracy that we are not going to go below this price here at 64,958. So my little contribution for those people who are out there waiting with their money to enter this market, if you're waiting for this level here at about 50 to 52,000, or you're waiting for this level here at 40 to 41,000, or indeed the majority are actually waiting for 60,000 because that was the lowest price we came back to recently. We can see that the whole consolidation of this big move has been around and above the 60,000. So the majority of people have been waiting for 60,000. But from what I've shown you in the charts, it looks unlikely that the price will go to 60,000. And because we've already had a test of that 64,000, it may be that we don't come back and retest that again. So we may well have seen at 64,000 the lowest price Bitcoin is going to go before we hit the top of the bull market. Okay, so I hope you found that valuable. I'm going to move on to the liquidation map, which is proving very accurate in many ways. The thing of note here is always the yellow zone. So you've got the yellow zone here at the top at around about 67,200, and you've got this yellow zone at the bottom as the support at 65,600. So this would suggest to me you've got a floor down here at about 65,000 and a ceiling above the 67,000. So this looks like the range that the price is going to be moving in the short term. It looks to me as though the price hasn't come back down to this yellow zone to take out the leverage players. So if I was waiting with some cash to get into Bitcoin, then 65,600 is probably the best price I'm going to get. So many people wondering why the price of Bitcoin has been subdued. Well, one element of the Bitcoin market is now the ETFs. And we can have a look at this because these are the institutions which are having money inflowing and outflowing from their trusts. And just by looking at the last 7 days, what we've seen here is quite a lot of red numbers here. So there has been quite a lot of outflows going on within the ETFs and not much inflows. So we can see why the price, when it got rejected at the 70,000, is come back again at these lower levels around about the 66,000. And it's always a good idea to keep our eye on this because it's giving us added information as to what's happening with the ETFs. Because one thing we know is that when we get these green numbers here rather than the red numbers, the Bitcoin price is usually climbing higher. Okay, if we move on to the dollar, on the weekly chart, we're waiting for some sort of a break of the symmetrical triangle. And normally in symmetrical triangles, in classical charting, they normally break around about the 70% mark within this triangle. So this is exactly where we are currently. So I would expect with a higher probability here for this to break, and it can go either way, but we are waiting for interest rates to go down, which would mean that the dollar would come back down. And we are expecting to have a bull market over the next 6 to 12 months. And for that to really play out, this has to be coming back down again in order to increase the liquidity in the market. So I would say with a higher probability, this is going to be coming back down rather than breaking to the upside. And we can see on the weekly time frame here, it's coming up to the resistance point one more time where it got rejected several times in the past, all along here. And you can see there's a support here as well. So this is a very strong support and resistance is coming up to here, and it's got to make up its mind. And if we have a look at the daily chart, we can see that it's leaving wicks at the top, i.e. there's a rejection of higher levels here. So it looks like more than a 50-50 for this to be now coming back down. Maybe retesting this red line, but it has retested that now multiple times already. So normally after the fourth or the fifth go, it tends to break down or break up, whatever the case may be. And moving on to the SPX and the 60-day cycle as the framework to look at the SPX, we've seen quite clearly here, we've got a right translated cycle, which is obviously bullish. We've got the rest of the 60-day cycle to go. So I would expect there's some more to go there before it comes back into the 60-day cycle low to the start of the new cycle. So this gap up that we had here quite clearly is telling us that the market wants to move higher. But the gap also is telling us that the chances are, probability is that wherever it goes, it's going to come back down and retest and fill that gap up here. And with this candle that we've got, the shooting star green candle on the daily chart, that's giving us a clue that this is going to go sideways for a while maybe, or even come back and fill this gap. So you may well fill this gap first before going higher. So we'll wait and see what happens here, but certainly a little period of consolidation looks to be on the cards this week for the SPX. And we'll catch up with this on Thursday. And if we have a look at the gold market, if you are invested in gold, then if you take a 6 to 12 month view, you can see quite clearly the trajectory is to the upside. We are in a bull market with gold. So with a 6 to 12 month viewpoint, there's nothing to worry about. And it's just a case of holding on, because what we've got when we broke this neckline here is giving us a very strong clue that when you break out like this, with a momentum candle, and a momentum candle is one that is 3 or 4 times larger than the previous candle. What confirms this big move to the upside is that we've had a confirmation of a follow through higher than the previous candle and another one over here. But you can see quite clearly there are long wicks at the top which are telling you that in the short term there are bearish pressures, because what we've just had is a rejection of higher prices at these levels here. And if we have a look at the weekly chart, we'll see exactly what's happened. So this was the candle I highlighted at the time back in April. Some people would call this a gravestone doji candle, some would call it a shooting star, and some would call it a low-lying spinning top. But the candle is telling us one thing, and one thing is for sure, is that you've got a rejection of higher prices. So when you get a candle like this, what you've got to do is, this is for those people who are trading, always put a ray at the top of that wick and also put one at the bottom of that. And what you'll find is that this particular candle will then conduct the affairs of all the following candles here, until it breaks either to the upside or the downside. And we've set some targets down here of the 61.8, so this is the box here at 2250, and the 78.6 is at 2200. So it may well be that we come and retest this. This is a high probability play as far as I can see. So what we had here with this red candle was an outside bearish engulfing candle, and so far we've had a little bit of a follow through, but this may well be an ABC correction into the 61.8 correction. We'll revisit it on Thursday and see where this is. And if we have a look at silver, what we can see is, again, we had a breakthrough with this candle. This is on the monthly chart. What we're getting now is some sort of a consolidation at the higher level. So we had this break up here. We're having a consolidation in this month's candle with a view to carrying on with this trend to the upside. And once again, we had this candle, which I pointed out at the time, this gravestone doji candle, that you can expect with this candle for the price to come back down. And we set these targets here, the single yellow line here, which is exactly where the price has come back to and found support. And we've also got the 61.8 down here at around about 28.0 to 28.3. So look out for that. I would expect it to come back down and retest this before moving to the higher side. But you can see quite clearly this is a very bullish move. We've had a trend move up here, then a consolidation, then another move to the upside, then another consolidation. We've just had another big move to the upside, and now we're having another correction and a consolidation before moving to the upside one more time. So both gold and silver looking incredibly bullish for the 6 to 12 month view, possibly even 18 months. Okay, moving on to the 60-day cycle for Bitcoin. What we've got here, we've ended up with a double top either side of the midpoint, and this candle didn't quite make it for a right translated cycle. And we're getting quite deep into this cycle now, and the current day here is at day 47. As we can see. So we're now within the realms of bottoming out in this cycle. And we haven't had a failed cycle because we haven't gone below the start of the cycle here. And we could easily have an early cycle with this candle, which came down to as low as 64,936. And where have you heard that level before? Maybe you want to go back and watch the first part of this video one more time. So let's see if it breaches this. Certainly I wouldn't expect a weekly close. Obviously on a daily close, Bitcoin can close below that halving candle because we were looking at the weekly close. And I did have a look at the daily candles on each of those halvings. And on one of the cycles, a daily close did close about 10 cents lower. And that was one daily close of 10 cents in 1 out of 3 cycles. So it looks even on a daily close basis that we will not close below 64,958. And on the monthly chart, what we've got here is that we've got a consolidation, just like this one here, at the top third of that rally. And similarly here, we've got the consolidation taking place on the top third of this rally here. So on the monthly time frame, this is incredibly bullish. We're trying to break through that 73,000 level. And this time around, we'll be doing it on the fourth, maybe fifth time now. So this looks like a high probability play to the upside now. The next time we retest 73,000. And finally, I just want to bring everybody back to this journey that we're on here. The best way I can add value to everybody watching this video, whether you're subscribed or not, the best way I can add value is that to look at this, that we're on this journey from where we are currently here to the top of the bull market, wherever that's going to be. And I've given you many targets in the last few weeks, and I don't really want to repeat them. So please go and watch the last few videos, and you'll see quite a lot of realistic targets that we've been able to ascertain by eliciting the information from these charts. And the reason why I mention this all the time is that you only have to look at what's happened before. So after this halving here, the people who found themselves at this halving were on this journey. But unfortunately and sadly, many of them, due to the way the market works, will have shaken them out, and they will not have ridden this market to the top of the bull market here. And similarly here, this was the journey that those people who successfully completed it, they were able to collect the treasure at the point here. And similarly over here as well. So those people from the halving, those who completed the journey, will have collected their treasure for going through the challenges and the difficulties and the issues all along here where the market was trying to shake them out. And currently we have exactly the same situation where the market is continuously trying to shake us out. But for those of you who have buckled in and fastened your seatbelts and packed your bags with the Snickers to give you that extra boost of energy to get you to the top of this bull market, you're the ones who are going to collect the treasure that's waiting for you here at the top of the hill. And on that positive note, I'm going to leave you there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, questions, or suggestions, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.